Hello, welcome to Energy Today. I'm Jocelyn Elakeche Ada, and we're here to provide you with insightful analysis on the pressing issues affecting the energy sector. Energy Today delves into critical topics such as energy production, regulation, and the transition to sustainable energy sources. We'll explore what these developments mean for the nation and how they directly impact your daily life. Today, we are discussing something that has affected all of us in more ways than one. But first, let's bring you up to date with the latest energy news.
We begin with the Nigerian National Petroleum Company Limited's response to recent reports in national newspapers about the company's substantial debt to petrol suppliers. In a statement issued by the Chief Corporate Communications Officer, Olufemi Shoneye, NNPC Limited acknowledged that this financial strain has put significant pressure on the company and poses a risk to the sustainability of fuel supply in the country. Mr. Shoneye emphasized, in line with the Petroleum Industry Act (PIA), NNPC Limited remains dedicated to its role as a supplier of last resort, ensuring national energy security. We are actively collaborating with relevant government agencies and other stakeholders to maintain a consistent supply of petroleum products nationwide. As the situation unfolds, many are watching closely to see how these developments will impact the fuel supply and the overall value chain, including potential effects on fuel prices. As part of efforts to stop crude oil theft, the Nigerian National Petroleum Company Limited, NNPC Limited, says 72 illegal crude oil refining sites have been uncovered and destroyed within 1 week in Rivers, Delta, and Abia states. NNPC Limited states that on August 18, a vessel was apprehended by Operation Delta Safe in the southern Ijo area of Bayelsa State, loaded with stolen Shell Petroleum Development Company flow lines. This incident indicates that thieves not only breached pipelines, but also harvested crude oil from them. 12 suspects on board the vessel have been detained for further investigation. The NNPC Limited also reported 46 automatic identification system infractions at sea involving vessels and the seizure of 24 wooden boats transporting stolen crude. However, several vehicles loaded with stolen crude were intercepted across Delta, Rivers, and Bayelsa State. The company recorded 33 illegal connections and 8 oil spills due to vandalism, with a total of 204 incidents of oil theft documented from August 17 to 23rd. The Nigerian Upstream Petroleum Regulatory Commission (NUPRC) has been speaking on divestment activities by international oil companies (IOCs) in Nigeria. In a bid to underscore its dedication to transparency and public awareness, the Commission announced that ministerial approvals have been granted for the divestment of Nigerian Agip Oil Company (NAOC) to Oando Petroleum and Natural Gas Company, as well as for Equinor Nigeria's divestment to Chapel Energies. According to the NUPRC, the transactions comply with the Petroleum Industry Act, the PIA 2021, and complies with the established regulatory framework and consent approval processes. The Commission also addressed the ongoing divestment process involving Mobil Producing Nigerian Unlimited and Seplat Energy Offshore Limited, which is currently under review. This process is expected to be finalized within the 120-day timeline mandated by the PIA. The Commission stated that all divestment applications are evaluated based on technical capacity, financial viability, and environmental responsibilities, which are to ensure compliance with relevant legislation and guidelines. The Ministry of Petroleum Resources has launched a technical working group, TWG, to oversee the utilization, implementation, and establishment of gas power projects in local government areas across Nigeria. This group includes representatives from the National Gas Expansion Program, NGEP, the National Directorate of Employment, NDE, and the Association of Local Government of Nigeria, ALGON. The Permanent Secretary, Ambassador Nicholas Abuela, emphasized the alignment between the NDE's Vocational Skills Development Program and the NGEP's Gaspreneurship Initiative, which offers training across the entire gas value chain. The technical working group will spearhead the Gaspreneurship Initiative, fostering collaboration to promote gas-based economic development and job creation in local communities.
All right, now let's get back to a topic that's been on everyone's mind lately. You've probably heard the term subsidy in relation to petrol. If that sounds familiar, you may also recall hearing the government announce, subsidy is gone. Recently, we've been hearing terms like shortfall and under recovery. But what does these terms really mean? Now, let me ask you this. Is this just a new way of saying subsidy? And if so, why not just call it what it is? We're here to break it down for you. Following NNPC Limited's presser, some national dailies reported that the federal government paid a staggering 15 trillion naira of petrol subsidies over the last 14 months, even after announcing the removal of subsidies. To help us make sense of all of this, we have a special guest today, Mr. Johnson Chukwu, founder and managing director of Cowry Asset Management Limited. He is also the chairman of Fidelity Pensions Managers Limited and Virgin Forest Energy Limited. Mr. Johnson Chukwu serves on the board of directors for Royal Crest Methodist Hospital, Ugweke, and Nkechi Cowry Methodist Hospital, Uzuakoli, both in Abia State. We began by asking him about the figures published by NNPC Limited and their recent profit declaration.
Thank you for having me on your program. I would say that what hit me when I saw the 3.3 trillion naira is that we have a piece of good news, something to cheer about, particularly at the time when a lot of people are looking at the negatives. And if you consider the fact that NNPC was coming, it's coming from a loss of about 803 billion just 5 years earlier in 2018, one could only say that the company actually managed to break even in 2019 when it made a loss of 1.7 trillion. And we've seen a consistent increase from about 200 billion to about 600 billion to 2.5 trillion and then now 3.3 trillion in profit after tax. And that's, for me, we are seeing a consistent pattern. So you see a trend, a consistent trend in terms of improvement and performance. And I felt that having achieved 3.3 trillion, there is reason for everyone who is involved in the Nigerian oil and gas sector, for the government, for the citizens as well, because the citizens are the ultimate beneficiaries of the profitability of NNPC, to cheer. Because when they make losses, it is our national treasury that's absorbing it. When they make profit, as we have now, it's the national treasury that gets the benefit. And that takes us to the second part of your question, about 2.1 trillion dividend, final dividend. That's after about 500 billion interim dividend. That takes about 2.6 trillion naira in dividend payment. In addition to that, NNP is also paying about 2.6 trillion naira as tax to the government. So in terms of contribution to national treasury, in terms of income that we share by 3 tiers of government, in a single financial year, NNPC is giving to the public, to the system, to the economy, about 5.3 trillion naira in terms of tax and in terms of dividend. Some of the major highlights I looked at is efficiency. And when you talk of efficiency, you're talking of ability to generate return based on resources given to you. So that you talk of efficiency. And if you look at the net profit margin, we say a net profit margin of about 14%. And that's quite comparable to the best you have anywhere in any sector of the economy. And then you have an operating profit margin of 18%. In addition to that, the company was able to generate return on equity of about 12%. And what that means is that the benefits that are accrued to equity holders, and in this instance, the equity holders is Federal Ministry of Finance Incorporated and Federal Ministry of Petroleum Incorporated. So, and both of them are basically owned by the government. So in effect, you have a return on capital invested in NNPC of the tune of 12%. So those for me are some of the highlights I saw that when you see a consistent pattern of efficiency, and I'm talking of 3 parameters, you have a net profit margin, you have an operating profit margin, and then you have a return on the equity. All of them above 10%. That was quite impressive for me. NNPC Limited is owned by Federal Ministry of Finance Incorporated and Federal Ministry of Petroleum Incorporated. Both of them own 50% each of the company. So whatever profit NNPC makes goes to pay dividend to these 2 agencies of government, parasites of government. And those 2 agencies are 100% owned by the government, so they also transfer their entire earning to the Federation account. So in effect, what NNPC had achieved in 2023 is that it transferred to the Federation account about 2.6 trillion naira in terms of dividend, and that was shared to the 3 tiers of government. How does it affect the man on the street? With the sharing, assuming that all things are equal, because at that point NNPC had already discharged its own responsibilities. The rest is for the executive arms of government to now effectively deploy the resources that NNPC has passed on to them for the welfare and well-being of the citizens. So in that case, you're going to see an increment in allocation to the 3 tiers of government, about 5.3 trillion are coming from tax and coming from dividend payment. And that will effectively help the state government to pay salaries. It will help government that are prudent to build infrastructure, to fund security. So all the money the government is getting, if you look at how much has government shared this year, the government this year has shared about 8 trillion naira. So if you say that the 5 trillion naira, 5.3 trillion naira came from NNPC, then it simply means NNPC has accounted for more than 50% of what the government has shared. And that is to say, assuming that was not there, many states would have struggled to pay salaries. Many states that are doing infrastructure may not be able to do infrastructure. The funding of security would have been a Herculean task. So every aspect of the government activities at the 3 tiers of government have impacts of the profitability of NNPC's contribution to the economy.
The most intriguing part is that the Nigerian National Petroleum Company Limited refers to first subsidy payments as shortfall or under recovery to describe the financial losses they incur when the government keeps the petrol price artificially low, below the actual market value. This terminology indicates that NNPC is covering the difference between the cost of importing and refining petrol and the price at which it is sold domestically. Interestingly, this outstanding financial performance has been attributed to the successful implementation of the Petroleum Industry Act. So, what does all this cash flow mean for NNPC Limited's ability to contribute to the Federation account?
Let's start from what do I make of it. In the first place, you have to go to Petroleum Industry Act. The Petroleum Industry Act imposed a responsibility on NNPC to ensure energy security, to be the last supplier of products, to ensure that you don't have crisis. If you look at the fact that the government said subsidy was gone, and at the time they said subsidy was gone, the exchange rate that was used to index the pump price or the landing cost of fuel was about 750 naira to $1. So if you use 750 naira to $1 and convert the price of ice at that point, you will get a landing cost that was below the pump price that was fixed at the time subsidy was declared to have gone. But unfortunately, exchange rate had moved by over 100% to about 1,500, 1,600 naira to $1. So what has happened is that because ice, that's a refined petroleum product, is priced in dollar. So when you convert this, assuming the same price level is still ruling, when you convert that to at a higher exchange rate, you're going to have the product land at a price that's above what it was previously fixed. And unfortunately, the country is going through what we call cost of living crisis. So there is a limit to the absorbing capacity of households in terms of increasing cost. So the government, in its own wisdom, decided that they would not allow for consistent adjustment in the pump price in tandem with the movement in exchange rate. And therefore, NNPC, being the last supplier, is now taxed with supplying the product at a landing cost that is higher than the pump price. So, and that's why NNPC said, this is an amount we can't recover from the pump price. They decided to call it under recovery. But economically, you can call it subsidy, because a subsidy is any cost above the selling price, which is induced by either an authority or a regulator. So which somebody had to absorb it. So in effect, the subsidy opened up and expanded because of movement in exchange rate. And then you're asked, is it sustainable? It's going to be a tough call, but the funny thing about life is that we have to recognize that different agencies have different responsibility. The government's responsibility is to improve the well-being and security of the citizens. NNPC is a private limited liability company that is required to operate as any other private limited liability company, focus on profit and maximizing shareholders' value. So it then means that NNPC cannot absorb the subsidy or the recovery. So it has to be absorbed by the federation account because it's now part of the benefit that the federal government is passing on to the citizens. Is it economically the most optimal way to pass on benefit to the citizens? I doubt. But can they pass on the landing cost today? It's going to be a difficulty because I said we are dealing with the cost of living crisis. Hopefully by the time the new salary scale is fully implemented and then we have some level of stability in price levels, we may probably get to a point where income will adjust and the citizens can afford. But ultimately, we have to find a way of phasing our subsidy.
It's time for a quick break, but stay with us because when we return, Mr. Chukwu will explain how Nigerians can benefit from NNPC Limited's 3.297 trillion naira profit reported in its 2023 financial statement. Don't go anywhere. Welcome back. If you're just tuning in, we're here with Mr. Johnson Chukwu, founder and managing director of Cowry Asset Management Limited and chairman of Fidelity Pension Managers Limited. He has been walking us through crucial topics like subsidy, under recovery, and shortfall.
We can't be paying more than other countries. It's a very simple thing. If you want to know what a liter of fuel is going to, go to Cameroon, go to Benin Republic, go to Niger Republic, go to Ghana. Many of them are close to equivalent of $1. Most of them are the equivalent of about 90 cents, 80 to 90 cents. $1 today is about 1,600. Even with the scarcity we have today, of course, that does not give excuse for scarcity or the fact that we have to buy with jerry cans. But the reality is that even at that black market rate, it's still not anywhere close to $1. Like I said, $1 is today's exchange rate. The challenge we have is that exchange rate has moved. Assuming the exchange rate remained at 750 naira to $1, you know the implication is that pump price would have remained even if there's no subsidy, even if it's mark to market. I mean, full cost adjustment. You would have still had a landing cost of maybe 600 naira to $1 per liter. And then Nigerians would have gladly be paying that. So the solution to this issue is how do we improve foreign exchange earnings so as to stabilize the exchange rate and possibly see naira appreciate.
Mr. Chukwu mentioned that the benefits of this profit extend to Nigerians. NNPC Limited aims to enhance local supply, mitigate fuel shortages, boost government revenue, and foster investment confidence in Nigeria's oil sector, ultimately benefiting the wider economy. With NNPC Limited becoming more transparent and accountable, thanks to the PIA 2021, how will this shift change the perception of investors and other stakeholders? Will it boost their confidence or raise new questions?
For investors, these are what we look out for. You know, I'm an investment banker. So what we look at, what kind of returns will I make if I invest money in this institution or in this asset? And most investors are looking at, NNPC obviously is going to be the most capitalized company in Nigeria when it gets listed. And Nigerians will be eager to have a share of the pie, particularly investors. And I hope that by the time the initial public offer is made, that the distribution pattern will be so that even everybody will have the capacity to buy 10 units, 100 units of NNPC shares. Because if you have an asset, an investment that gives you a return on equity of 12%, then you're likely going to see a capital appreciation above 50%. So in effect, it will create so much wealth for everybody who is invested in it. And investors are looking out for that opportunity. Remember, similar institutions globally are listed. You have Saudi Aramco is listed, Petrobras of Brazil is listed. So investors are looking for opportunities to have NNPC listed because you're going to have one institution in the country that straddles the entire value chain of oil and gas sector, starting from upstream, where NEPL is operating, to downstream, where NNPC trading and NNPC retail are operating. I will start by saying one of the comments I always made, that success is never an accident. Consistent success is never an accident. It's not a happenstance. We've seen a company that has grown performance from a negative of 803 billion just 5 years ago in 2018 to a profit of 3.3 trillion. And if you look at that trend, it's a consistent trend. So what that means, we've seen an improvement in their efficiency and effectiveness of leadership and management. And I think they have brought in some of the best standards you have in that obtained the private sector institutions. Now they are now a private limited liability company. Issues like performance-based reporting, issues like budgeting, issues like quarterly appraisals. And I also think one of the things they've done is that they focus on how to optimize value, which is also why you are seeing improved efficiency ratios. And I think one must give credit, no matter your interest or your whatever orientation you have, to the fact that we've seen a consistent improvement in the quality of management and transparency in the company. And that level of transparency was actually highlighted by the fact that they even came to tell us about the crude swaps, which there is no financial reporting standard requires you to show that level of disclosure. Because it's something of interest to Nigerians, they have also come to tell us that, look, we have 221,000 barrels per day that are committed to crude swaps. And an amount of crude swaps are standing today. And those are the things that investors are looking for, that level of transparency that say, look, I can almost be confident that every information I need in this company is open to the public. One of the things you look at what valuation method will you use. If you use maintainable earnings, with the kind of growth we've seen, you're going to see a valuation that is going to be materially high. If you even use a net asset value, or you use any of the comparative method basis that you use to value a company. So you're going to see a company, I don't know what price they will come to the market, but you will see a company with prospects. And remember, investors are interested in the future cash flow earnings of a company. So if they see a pattern, which is why you see a trend, and like I say, if you do a maintainable earnings method, which is the most basis you use for a progressively growing company, you're going to see a very attractive investment. So I think NNPC will be highly subscribed. I had made allusion to the fact that the issuer, which is NNPC, the board should ensure that there is some level of broad dispersion in terms of distribution of the shares. I believe as investment bankers, it's an instrument we will recommend to investors when it comes to the market.
There you have it. A big thank you to Mr. Johnson Chukwu, founder and managing director of Cowry Asset Management Limited and chairman of Fidelity Pension Managers Limited, for guiding us through the intricacies of the energy sector. And that's a wrap on today's edition of Energy Today. I'm Joycelyn Elakeche Ada, and on behalf of the entire team, thank you for joining us. Goodbye.